Welcome back, traders. So if you're here to find out whether it's time to pump or dump gold, you're in the right place. Because in the next few minutes I will give you a full technical analysis and breakdown on what to expect on gold for next week. So if you want to find out the conclusion, make sure you watch the video till the very end. But before we do that, let's have a quick recap on what happened this week. So starting on the 1 hour chart, the market closed on 5th of February Friday and opened back up on the 7th of February Monday. And last week I mentioned in the video that I expect the price to bounce back up to the 1830 area, tap into this liquidity zone, where you can see clearly, if you look left, there's a lot of interest in this consolidation area. So when the market opened on Sunday and I started trading on Monday, I identified this consolidation area right here. Now, it wasn't just me who saw this consolidation area, and it signaled to me that there's a lot of pressure building up before an impulse move to the upside. So most of the traders placed their stop losses just below the previous low of the consolidation area, because this is what you've been taught by many forex educators and all the cheap courses online. But if you know that the price is going to come back to the 1837 area and you know, there will be an impulse move to the upside, we could expect that there will be some kind of market manipulation. Or I wouldn't even call it market manipulation, it's just common sense, because if every single retail trader places their stop loss just below the previous low in this area, all the market makers and all the big banks know that there is a ton of liquidity sitting in this area right here. So if retail traders enter on the bottom of the consolidation area and place their stop losses just below the previous low, you can be 100% sure that the market makers, all the big banks, will tap into this liquidity area, because they need fuel to fuel the move to the upside, this impulse move. Because if you think logically, what's the opposite side of a buy trade? It's a sell. So what the market makers and banks want is to buy the asset, the underlying asset. In our case it's gold. They want to buy this asset on a discount price and sell it later at a premium. So what they do is they move the price just a few pips below this previous low, and they hit all the stop losses of the retail traders, so they become immediate sellers. Then the retail banks, the institutions and the market makers, they can buy the underlying asset at a discounted price, and as soon as they have the discounted price, they just push the price up and they can sell this discounted price what they purchased the gold at. They can sell it at a higher and higher price at a premium to all the suckers of retail traders. So when I saw this consolidation area, I knew that the price is going to come back, retest the previous low, come back up, and then tap in once again to this area right here. So what I did, I placed my buy limit just below the previous low in this area, and I didn't have to use much stop loss because I knew that there will be some kind of manipulation and some kind of push down. But to be safe, I used about I think 10 pips or something stop loss. So as soon as the price tapped into this liquidity area, you can see that there was a sharp move to the upside and the price breakout from this consolidation area. Now I had another trade somewhere in the middle, because I knew that there's going to be a sharp move to the upside, and the profit target was the 1839 area. So, and also I had another trade at the retest of the consolidation area, because if you go down to a smaller time frame, even smaller on the 15 minutes, you can clearly see that as soon as the price break out, it came back to retest this consolidation area. And if you look, this was the high of the consolidation area, and if you go right, look what happened. The price just barely tapped into the top of the consolidation area, and there was a sharp move to the upside. So I scaled in right here. I used about 5 pips stop loss because I knew there's going to be a sharp move to the upside. So overall I had 3 long positions from this area on Monday, and overall they were 307 pips, 256 and 198. So with all the profit from last week and these 3 trades, I managed to hit the monthly target of 10% on my account. So that was a good start of the week. And it's only the 8th of February by the time I made these trades. So I was pretty happy that I managed to hit all the targets for the whole month. So as soon as I hit the target for the month, I reduced the risk by 50% and I entered into a short position right here because I expected the price to come back to the 1837 area and then come back to the 1805 and then bounce back up. But the price didn't respect this position, so I get stopped out, and as soon as the price hit my stop loss, I was sure that the price is gonna come back to the 1855 level because in the market analysis we made in the private members group, we knew that if the price invalidates this area, then the next stop will be the 1855. And I appreciate the comments, guys, but I do not have time to make a video every single time if the price invalidates any setup. But what do I have is time to tell the members in the private Telegram area, so the members who purchase the course of the AlphaFX Academy, so the Basic, Pro and Premium, or the Gold Scalping course, they are members of the private Telegram group. So I was able to give them a shout out that, listen guys, the price invalidated the 1837, 1839 area, so we can expect to retest the 1855. So that's exactly what I did, and we had another setup. So I entered into another long position right here because as soon as I saw that the price is making a bullish pattern and found support and resistance on this level, I had another long position. But remember, I said that I reduced the risk by 50% because the number one rule in trading is protect your capital. So as soon as you hit your predefined monthly or weekly target, make sure you reduce your loss and protect your capital. So this is what I did, and I had another 200 pips actually on this trade. So overall you can see on the top left corner of the screen that we are in profit so far for this week and for the whole month. So as soon as the price tapped into this area, I had a sell limit right on 1855 all the way down to 1838 because this was the bottom of the support. So I placed my stop loss, my take profit level right here. So because I set the sell limit on the 1855 area, I used on like I think 20 pips of stop loss because we have many confirmations that the price will tap in this area, but it will not go any higher. One of them is the weekly trend line or the monthly, and also we had another confirmation, two confirmations, Fibonacci 61.8 level, as well as if you look left, we had support and resistance. So I placed the sell limit. As soon as the price tapped into the sell limit, the price just melted and hit the take profit immediately. So this trade was another almost 200 pips, so 198, but this was a smaller profit because I mentioned I reduced the risk by 50%, but profit is profit at the end of the day, so I was pretty chuffed. After that I was playing around with smaller lots and I entered into a long position, actually two long positions on this level because I was expecting the price to come back and retest the 1855 area because there was such a sharp move to the downside. So I was expecting some kind of retest, but it didn't happen, and I entered somewhere here. I used a really tiny stop loss, about 10 pips. So I had two losing trades so I had two losing trades on entering on this level. So when this happened, I just stopped trading because, you know, once you have 2, 3 or 4 losing trades, then you just have to stop trading and move on to the next one, or just watch the market movement. So if we go back to a higher time frame, for example the 4 hour, it was pretty obvious what's happening right here. I'm pretty sure you're all familiar with this old pattern, which is the big head and shoulders. So we had the bullish move to the upside, we formed the left shoulder, came back, formed a support, bounced back up, we formed the head, came back down, we broke this original trend line. Let me just delete this. So we broke the original trend line, came back to retest it, and then the price just melted. And if you look left, the previous support level hold it pretty well, and this area also consolidates to another important Fibonacci level, which I teach in my course. So the price bounced back. So let's start to analyze what do we expect next week on gold. So if I just delete this quickly because we are not no longer interested in this. So you can see that the price stepped into the 1810 area. So if you look left, there's a consolidation, so that was expected that the price is going to hold and bounce back. Now, the next destination I expect on gold is to come back to the 1846 area or the 1838 to retest this head and shoulders, because we have so many interest, and you can see that the pressure is building up. So there's so much volume happened in this area. So if there are any orders left unexecuted by the brokers, you can be 100% sure that they will come back and they want to execute those orders, because you have to remember there isn't just market orders in the market, there are discretionary orders when the brokers decide on behalf of their clients whether they want to execute an order or not. So for example, if they had a pending order for a client and it wasn't executed at this level because of spread or any other reasons, they're gonna push back the price up and make sure to execute all the orders, because all the brokers, they make money by executing as many orders as possible. This is how they make commission, and this is how they make money. So I expect gold to come back to somewhere around 1838 or 1846 area. It's difficult to tell right now because if you look left, we have so much interest in this area. So either way, if you enter into a short position, make sure you use a wider stop loss, so just above the trend line as well as the 1850 area. And the first take profit level will be the previous low of 1811. So if we move this here, this would be a short scenario if the price come back and retest this area. Now, if this fails and if the price breaks through the trend line as well as this strong support and resistance level at the head and shoulder and the previous high, you can expect the price, if it breaks through this trend line, to come back and retest this trend line, and then you can enter into long position. Now, let me just go back to the daily time frame and let me show you something. So I'm talking about this for the last couple of weeks, that if you look at the bigger picture on the daily time frame, we have a massive descending trend line as well as a strong horizontal support and resistance, which lines up with the previous all-time high back in 2012. So this is pretty strong, and also this is around the 1800 level, which is a strong psychological number. So I expect this to hold, but until we don't have any clear market direction, meaning that the price breaks through to the upside or to the downside, so either it breaks this horizontal level, comes back and retests it, and then makes its way to the downside, or the price, as previously explained, breaks through this upper trend line and retests it and gives us a direction to the upside, we can expect price to have some shitty moves in this area right here, because you see this is a big fucking wedge. So you can expect the price to play around in this area and have some unexpected moves to shake out all the retail buyers or sellers. So until either the descending trend line or the horizontal support and resistance level doesn't break, you can play around within this area, but be warned that the price could move against you. So just to quickly repeat, I expect the price to bounce back from the 1813 level, came back and retest the 1846, 1840 area, and then bounce back down to form a higher low. So this was the previous low, and then we expect from a higher low. So price to come back all the way to 1840, and then I will enter a short position down to here. But important, if you enter into this trade, this is only for educational purposes and you are only responsible for your own trading decisions, so do not take as a trading advice. And also at this level, make sure you watch the price action, and what you want is go down to lower time frame and signs of clear rejections. Once you have that, you can enter into a short position. Or the safer side, if we have a trend line going up, just wait for the trend line break and then the retest of the trend line as well as the support and resistance, and then you can enter into a short position. So the price will go up something like this, breaks this trend line on the smaller time frame, and then you can enter into a short position. So once again, do not risk anything more than 2 to 3% on each trade, and make sure you manage your position size. Thank you guys. If you have any questions, make sure you visit my website at alphafx.hu, and if you have any questions about the courses and mentoring, you can hit the contact button and send me a direct Telegram message. Thank you guys, and have a profitable trading week.